Hello, good morning from Riyadh. Right now, we are all in lockdown in Riyadh due to the coronavirus pandemic. This must be the case with most of you, wherever you are living right now in the world. Now, because of this coronavirus pandemic, the entire global economy has been shattered. Now, the people who have invested in equities must be facing a lot of loss, or many of you may be facing a loss, not all of you, and must be panicked because of the situation of the current economy. However, I will illustrate to you today that under this downturn also, you need not face a loss in your investments if it is done correctly. There is a strategy that if we invest equally in equities and debt and in gold, then we can minimize loss. And in many cases, we can make some profit as well. So I will illustrate to you this idea through an illustration on Excel. So let's head to Excel next. So here we are in Excel. I have got the data regarding three indexes: the Sensex index, the bond index, and the gold prices from January 2015 till April 2020. So I have got this data. So the Sensex basically tells us about our investment in equities. The bond index tells us our investment in the bond market, and the gold price tells us about the investment in gold market. Now we take a case where we will invest in lump sum first, and then we will see a case where we will invest in small installments. So first let's take the case where we'll invest in lump sum. Let's take the first case where we will invest rupees 10 lakhs in lump sum in only the equity market. So let's make an investment in equities. So the amount what we will invest is 10 lakhs. Okay. And we make the investment on January 2015. So if we make this investment in January 2015 in the equity market, if we take by a simple case where we'll take the amount we have invested on based on the index, then we will get that we have so many number of units. Normally, you cannot invest in the Sensex straight away like this. You will have to buy some index fund. So the index fund will basically move the same way as the Sensex is moving. So we can use this calculation and it will be correct in whatever the decision that we make. Now, this is the current amount. Now, we have got so many number of units. What will be the value of this unit in the current market? So we'll calculate the present value. So the present value will be, this is equal to this into whatever is the value of the Sensex right now. So that is, we see that we are still making a small profit because we invested in 2015. So this is the value what we are getting right now. So we can find the rate at which our investment has grown by saying rate and then taking the duration. We do not have the we started with the investment of this much and we have presently this much value. So we got a rate of interest of around about 1.36%. Now, supposing I divided the investment into equities, gold, and debt market. what would be the situation? So we say investment diversified. So let's say that we take in equities 10 lakhs, in bond 5 lakhs, and in gold 5 lakhs. So the number of units you would have had is this divided by this. This is equal to this divided by the bond price on January, and this is equal to this divided by the gold price in January. So our total investment is this much. Now what is the current value? The current value is equal to the number of units into the price as of April 2020. This is equal to number of units in bond, and this is equal to number of units in gold. Okay, so what is the current value is equal to sum of these three numbers. So we see this much amount of value we have got. So what is the rate at which this amount has grown? Let's find that out. We say rate. We have to give the time first. So we see that our current investment has grown by 5.44%. So if you compare this with this number, it is far more. So if you see that if we invest across the instruments, that is in equities, bond, and gold, we can make a reasonable profit even in a very down market. So this is why we are trying to illustrate to you that we need to diversify our investment portfolio across equities, bond, and gold. Now let us take the case where we will invest in installments. So let's say that we will invest 10,000 rupees in the Sensex, and we will invest 5,000 rupees in bond market, and we will invest 5,000 rupees in gold market. So this is our investment pattern. So if we do that on a monthly basis, then the number of units we will get from the Sensex is 10,000 divided by the index value, and the number of units we will, so I will just anchor this. so that I can copy it. So number of units I will get from bond market is this much, and the number of units I will get from the gold, number of grams of gold that I will get is this much. So if I copy this value up to March, then this is the number of units I will get in equities, bond and gold. So now I will sum it up. So I say sum of the total number of units what I have got with me as of April. So I get this. So first let's see what was our investment. Our investment was the count of number of months between March and January 2015 multiplied by the amount we spent per month. So this much we spent on equities and this much we spent on bond and gold. Okay, so what is the current value? The current value is the total number of units multiplied by the price in April. So this is what we get. So you notice that in the equity market we are making a loss, and in the bond market and the gold market we are making a profit. So let us see what is the total investment. Total investment is the sum of the three investments that we made, and the total current value is the sum of all the three current values. So you see that in spite of making loss in equity, we are making a profit, and we can also calculate the rate of profit that we are making right now. So you can say rate divided by 365, 0, 0 minus the total investment and the total value. So we see that in spite of making a loss in equities, we are making a profit at the rate of 2.62%. So I hope it is illustrated to you that if you divide your investment across equities, bond and gold, then the chances of making loss is very minimal. In fact, you can make a profit.